following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show. I've been listening to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We have the Dow Industrials down 57, NASDAQ off 12, S&P's down 6.5, gold contract flat at $1,165 an ounce. Silver down 3 cents at $15.87. Platinum off 9 at $9.86. Copper up a half a penny at $2.36 a pound. Light sweet crude down 81 cents, trading at $43.16 a barrel. Bonds, 10-year up 11 ticks, 128.30. 30 up 15 ticks, half point, 158.16. Both the 10 and the 30, folks, are saying, guess what? Yellen's not going up on rates, even though she's claiming she's going to go up on rates before the end of 2015. They have one more meeting. They have an announcement tomorrow at 2 o'clock, one more meeting in December, and that's all she wrote. The way the bonds are trading, though, bottom line, bonds continue to go after higher price, lower yield. King dollar. King dollar's up 45 ticks, 97. Now, King dollar, no doubt, took out the swing highs of September, last Thursday and Friday. It took them out with conviction. So we have divergence out here, and it's pretty cool divergence coming into this meeting tomorrow. Euro is down 17 at $1.10, and you get the yen trading down a half a penny at 120.35. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have out here? Let's bring this baby up, because this is going to be I love days like today, folks. Let's see. There she is. Okay. So, what do we have? If we go into the SPY first, what you're going to see is this. You're pulling back. You have light volume on the pullback. So there's no conviction on the pullback here, which is going to be really intriguing, because we've done 57 million shares. The high of Thursday was 205.51. You're at 206.23. So the SPY's not telling us anything. We get over to the Qs, however, and since Apple's going to be ruling this market after the close, the Qs are telling us something. And this is how the Qs are shaken out. So the Qs have done 21 million shares. The high of Friday is 113.24. Well, this always blows my mind when it actually just hits the exact number. Like, how do you hit the exact number when you're dealing with something like $113.24? Well, bottom line, we hit it out here. Now, we have 21 million shares. You're running into 53 million. If this baby can't get into this 123.24 at the close, that's telling me that Apple's not going to trade up at 4:30. It's going to trade down, because Apple really isn't telling us anything. So if we go over to Apple and we take a look at Apple, the way Apple is trading out here, what the bearish part would be that it came down on volume yesterday. We came down on 66 million yesterday. Today we're doing 40. Nothing heavy right now. We went up the prior day. So this is like a consolidation. And, do I think Apple's going to go lower on a long-term basis? Well, even long-term, 2, 3, 4 weeks, yeah, I do. But intraday here, it isn't telling us a thing. What we just did have is this, and this is where it very well may be 4 o'clock. What we did have, if I take Apple and, You know, so I love it. It's great, folks, when they're coming out with earnings right away because you know whether, you're right or wrong on the deal. Bottom line is that what Apple has done is this. The last spike down, this last 10-minute spike, did have an expansion of volume. So if Apple did break its low today of 114.74 with volume, then your probability absolutely goes higher that what you're going to see is that Apple will trade down when they come out with their numbers at 4:30. The expected move in the option market for Apple, folks, is a plus or minus 6 points. That's how and that, by the way, is a very small expected move period for Apple. There's no two ways about it. Now, let's go over to IBM. This is the shocker out here right now, folks, okay? So, IBM is dragging the Dow down. Intraday out here, what ended up happening it was 1,400 hours, I believe. Yeah, oh, well, it's 1340. At 1340 hours, 1:15, IBM reported that the SEC is conducting an investigation into their accounting practices. That's a big number, folks. This is the last thing. I mean, the way that Wall Street moves, bottom line is that people are always cooking their books. The last thing I'd ever think about an IBM, though, meaning, their reputation, that you'd ever think that you'd even get an allegation like that. Bottom line, it's not just the allegation. It's just saying, okay, specifically what IBM come out and said that IBM disclosed that the Securities and Exchange Commission is conducting an investigation related to the technology sale of revenue recognition. It's a problem, folks. It's a larger problem. IBM has had a huge problem anyway, technically and fundamentally. Bottom line, IBM is breaking a B point, second time of a complex ABC structure on the way down. You're trading at 138. It has the volume. Price projection on this thing is 127. Now, depending on how long you've been listening, you can remember that IBM looks like it's going to go to 110. And 110's been screaming at IBM for a long period of time. And where I'm going with the 110, whoops, let's do that one. Track, where are you? There's track. So, actually it's 116. Yeah. 116, as soon as IBM broke down off its high, 116 is screaming, 116.60. That is the highs of October of 08. The lows there is 78, but it would have to, basically come down with some heavy volume because that's 315 million. As Apple had broke down, first breakdown on a monthly was 146 million. Next one was 93 million. This one here, we're already at 101, so this is going to be bigger than the last breakdown. This is a big problem. So inside the Dow out here today, I suspect most of this move is probably IBM. The Dow's down 48. What's moving it higher today is DuPont. That's up $1.71. Pfizer is up 87. United Health is up 274. And Boeing's up 178. Big Blue is the culprit on the way down. That's down 566. Chevron's up $1.50. Caterpillar's down 112. And United Technologies is down 121. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 47. You get the NASDAQ off 7. S&Ps are down 4.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow off 52. Walmart is down 58. You got Honeywell down 42. You got Caterpillar off buck 19. Oxy's down 154. Let's go over to that oil market. We take a look at there she is. Let's see. Take a look at this oil market. So what we had out here today, inside the oil market, the oil market yesterday, so crude, folks, is down 1.9%. And what we had yesterday is that it broke out the bottom of the trading range that it's been trading in. The bottom of that range was laying out there at the $44.31, so we're at $43.16 right now. And you still have volume coming into this baby. So when oil broke off the bottom, the low was $40.57. The high was $44.52. That's what we're going to go back into. You know, the real key is going to be, how do you go back into it? You know, does it hold price? Does it expand with volume? Thus far, we're still expanding with volume as we come into that price point. Now, let's go over to the diesel. Because what diesel was doing, I want to watch this shake out. So check this out. So diesel, folks, is your heating oil, is your jet fuel, all of the above. Well, the low, where the sign of strength was in diesel is 145.24. We're under that. We're at 144.47. We went to 142. The low in this contract is 142.71. What this is saying that diesel is actually building cars to blow away that low. Now, what's going to be really wild is this. If, in fact, that happens, the most conservative way of doing the ABC goes like this. I'm not even going to take the top of the range, because the top of the range would be 211. I'm going to take from where the diesel had gapped down on between the July 4th weekend, the 2nd and the 6th. So that's 186 down to 150. So you get 36 cents. That brings you, so 73, 63, 53, 43. That brings you to 138. 138. You take the top of it, it's really going to be a trip. 138 would be the next stop. If you take the top, well, I'm not going to take the top, because what does happen is that when you gap away, that acts as a swing point. So that's how you have to take it. Bottom line is that that is saying that we are going to have less expensive fuel coming at us. We go over to the natural gas market. Natural gas, that has been a disaster, continues to lower lows. What you have out here today, no juice in it, man. And, bottom line is they can't hold price. It looks to me, let's see, so if we did an ABC down on that, you get $2.98 to $2.60, that's 30 cents. That gets you $2.48, you're already at $2.36, so that's extending that move. The way, if we take a look at this, which we did yesterday, you put this on a continuous contract, it looks like we hit one, here, let's do this, because we already hit 194 in the continuous contract, and 190 is the low of April of 2012. And what you have here, folks, is this. The bar that we're trading at this month is way too big, man, for natural gas. You get a wide price bar. On the way up, it's awesome. On the way down, it's disaster, folks. So I suspect this thing is going to try to make its way down to $1.76. I mean, something like really crazy, no doubt. It's just, that's how it's set up. We got a couple other disasters that are in that marketplace out here today. Grubhub, that's down $7.80, trading at $24.40. This is an IPO that was done in April of 2014. Now, the IPO was done at $24, but guess what? The whole banking community, they did that. Then they pushed a secondary out at $40. Slightly toasted and roasting a lot of people, man, because this thing went straight down from $47.95 to $24. It's breaking its lows today with volume. So you have on this baby, man, this is crazy. It's okay. So you got an ABC down 47 to 24. So you're talking about, let me get this straight again. Yeah, $47.95. So 48 to 24. So you get $24. So this will end up being an $8 stock. Right now it's at $24.25. Big number, man. I mean, it's pretty sick watching that whole thing shake out. We go over and we take a look at the gold contract. Now, we do have major divergence between what the gold contract is doing and what the dollar index is doing right now. Specifically, that tomorrow we're going to, know what good old Janet Yellen and the crew are going to say, do, and all of the above. Thus far, the gold contract has a high volume high October 15th, which is dynamite, folks, okay? That's 1191.70. So we spiked that high with volume, and that's showing strength. We had 192,000 contracts up there. We come down, a rejected lower price on Friday, spikes higher again with 150. You pull back yesterday, and you'll have 80. Today, same setup. Now, that pullback is coming into where the strength was from October 14th. So that setup there is saying, hey, we very well could have an ABC structure on the way up. Okay, now let's go over to the dollar index, because here's the major divergence inside the metal versus the dollar. Dollar index last week blows away the swing points from September. On Thursday, we did 52,000 contracts. On Friday, you did 46,000. Now watch, we pulled back yesterday, light volume 24,000. We pulled back today with 26,000. That baby looks to me it's setting up. That took up to the 98.74. So tomorrow, 2 o'clock, hold on, man, because the volatility is going to be a monster. That's the way this is set up. If we go over and we take a look at the NQs for a second, well, here, let's first look inside what is moving the NQs, because it's not Apple. Inside the NQs out here, you have, Walgreens is up 554. Walgreens had bought Boots, which is largest pharmacy over in Europe last year. Now they're Walgreens Boots. Now they bought Rite Aid in the U.S., okay? That's, they're consolidating that whole business, so that baby's up 555 at 95.03. Biogen is up $16 at its high, at its highs for today at $290. You got Biomarlin up 531 at 109, and Mylan Pharmaceuticals up 197. So it's the biotechs putting the juice inside the NDX today. If we go over to the IBB, guess what? You know, keep going up, baby, because it has no juice. I'd love to see this thing get up into about the 337 area. Right now we're at 325. You know, we were down on 6.1 million yesterday. Friday you did 3.8 million. Yesterday we did 2.4. We're going to do about 2.3 today. That's the type of counter trend bounce that you want to see if you want to sell that baby off. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll be coming right back. Dow down 42. Nasdaq's off 6. S&P's back down 4. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at Apple. This is gonna, when we first we're talking on the air, we were talking about this 114.74, and you can see the first sell down. You get a slight sell down, expansion with volume, but bottom line, someone's selling this baby. It just broke a B point. Not a huge amount of volume, but substantial, meaning substantial in the context of where it's been trading. Now we're at 114.67. It's only down 61 cents, so that's not the big deal. What the big deal will be as we come into this close. If this stays under the 114.74, that's telling me that, guess what? You're going to run down to the 114.10. And if we take a look at Apple, as I said a little bit earlier, inside the option market, the expected move is 6 points either way. And now those expected moves, folks, sometimes they're right on, which is just a total mind blower. And what's going to be really cool watching this shakeout is at the bottom of its range is 107. You're at 114, so it's like, okay, man, you can go to the bottom of the range. There's no doubt about that. The top of the range, gets sick, is 1819. Now, a 119, of course, if it goes topside 6 points, it's going to break it. What it's going into, though, is where it broke down on the 3rd of August. And as I go back to, now this is where the kick is going to come in, because we know the biotechs are running, and what I was talking about is that 113.24. Coming into this 4 o'clock close, if those Qs can't close over 113.24, bottom line, my take, probability goes much higher. Apple's not going to trade up, it's going to trade down. We'll see whether it makes its numbers, what the numbers are, all of the above. But in that context, that is saying right now that the Qs aren't going to be able to handle price or volume. Apple hasn't been able to handle price or volume. What that would set up is that no matter what they have to say, the market will pull back versus going up. Now, what's really cool here is this. I love the idea that the biotechs are running the NDX. The reason being is that if we go over to the IBB, we are coming into a vicious downdraft from the 25th of November. That had 9 million shares, folks. You're coming in with 2. What I've learned is this. You can, and this is just not in the markets, folks, it's in life. You can learn more about how either markets work or life works watching the peripheral vision. Because how all these things fit together gives you a much better probability of, okay, what's going on here, man? It's going to be cool, man. And that's what I love about earnings coming out, particularly Apple, because Apple is a big one. Oh, this is even better. Terry the Tiger. Oh, I love it. Okay, so let's check this out. Oh, this is going to be insane. We got action out here today, man. Okay, so, oh, this is going to be good. Now, this is going to come out first. Thanks, Terry. Okay, so Gilead, which is a little powerhouse, is going to come out at 405, I believe. Yes, this is awesome. Okay, so they're going to come out with the numbers first. Gilead is a company that takes in about $7 billion a quarter. So let's go look at Gilead. Now, Gilead, from highs to lows, put this on a weekly. Okay, so from highs to lows, what do we have? Your first high was generated October 2014, 4.6 million. Your second high is generated, the 4.6 or 43, no, 84 million. Your second high is generated with 43 million. You come down with 75 million. You come down with 85. You generate a high with 46, and you generate a low. Okay, this is cool with 90. Okay, so the way Gilead's traded, 405, this should pull back. This is going to be great, man. Okay, so this is going to be cool. And this is what you have here with Gilead. Gilead, folks, okay, if you take this and we set this up on channels, and if you've been listening out here for a while, I'm in Mr. Bud Rolfs, our channel king. This one here, channels take a long time to set up. But if we take a look at this and you put these channels up, what you're going to see as at the top of that horizontal channel, you can make channels, vertical, horizontal. I have a horizontal one, and at the top of them, you push up to the highs. First high is 84 million. Second high has 43 million. 1 second. Had 48 million. Third high, 52. On the lows, first low had 103 million. Second low had 172 million, and the third low had 85 million. That's building cause for lower price. So that is going to be wild watching this whole baby shake out, particularly because when we take a look at Gilead and we take a look at that in the aspect of how, even on a daily, that it's pushing higher. You know, it had really nice juice last Wednesday. Last Wednesday, it goes from a price point of 100 to 109. It does volume of 24 million. That being said, what is it doing? Well, it's going into its downdraft that had 22 million. So that's great, 2 more million, but guess what? It couldn't get to the swing point. The swing high is 113.31. When you can't get to a swing point, what are we talking about? Swing points are where the market talks, walks, and squawks. That's the bottom line. That is the essence of where markets talk. Let's go over and take a look at IBM again. IBM's not a shocker in the sense that it wants to go lower. It's going to be, if IBM is playing with their books, and that's just going to destroy a reputation that's been out there for so long, it's sick. Bottom line, though, they're selling it out. And I believe good old Warren Buffett has the largest ownership of IBM. Let me see how this shakes out. Yeah, Berkshire Hathaway. Berkshire Hathaway right now has 8.2% of it, 79.5 million shares. State Street has been a seller. Vanguard, BlackRock. Yeah, they've been the sellers inside there. Bottom line, though, that thing is a mess, and it's going a lot lower. If we go back to Apple for a second, we take a look at Apple. Apple's getting some acceleration on the way down now. Apple, there she goes. She's breaking. They're selling Apple, man. That's crazy. Okay, so let's see. So it's 1537. Now the acceleration is starting, and it's like, okay, did someone get the press release? This is going to get wild watching this shake out, because what Apple does have is this. October 22nd, 114.10. That's a high volume spike. Now I got to pull this back further because that's going to hit that in about a heartbeat. We'll pull this back 7 days. Okay, so that's your first level. 113.73 is after that. So we're going on our way to 113.73 right now. You break 113.73 before this close, and she can get to 112.15. This is going to be an interesting close, man, on Apple. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 55. Nasdaq's down 12. S&Ps are up 5.5. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And, for all you folks up in the Boston area, man, I'm telling you, I guess, coming from Boston, I'm not surprised reading the story, but I am. So check this out. We talk a lot about natural gas, and natural gas, folks, came within pennies yesterday of a 13-year low. Well, guess what? All you nice folks in Boston are paying 3 times the amount for natural gas. And it's just amazing. So natural gas futures came within pennies of a 13-year low as traders grappled with the consequences of a supply glut. But don't tell this to Boston. This is a Bloomberg station story. Gas deliveries into New England were trading at triple the level of benchmark futures in New York. Algonquin gas pipeline reported maintenance-related capacity constraints this week on compressor stations near the Hudson River in New York to Connecticut. Higher gas costs coincided with reduced imports of cheap hydropower. Bottom line is they always got an excuse, man. They're just taking it to cleaners. It's like it's absolutely amazing, how that shakes out. That you get triple the. Yeah, and I guess they won't let build pipelines up there. There's 2 different things that I see happening there, though. Inside this, so they're doing maintenance on it. Well, guess what? Why do they do maintenance on it in the summer? I remember this years ago when my take on it, my personal take on it, is that they have this thing down pat. Do maintenance on it right when the winter starts, okay? That's when you shouldn't be doing maintenance on it. But guess what? If they can charge 3 times the amount of it, yeah, guess what? They're going to do it, and they're going to take it to the cleaners. Between Boston Edison, I don't even think Boston Edison's up there anymore, and Boston Gas wasn't that bad, but Boston Edison was like insane. Let's go over and we take a look at the. Okay, so how are we coming into this close with Apple? Because where Apple goes out here, so we're at 114.37. You're dealing with 49 million shares. So we're also going to, they're throwing some juice at this also. So out of that 49 million, if we just take a look at, we're at 15. Well, the sell down right here, right? You're at 49 million. Thus far, though, we've only had, here, I want to show you this if you happen to be watching Tiger TV. Because when you get a sell down, folks, or even, a move up, what I like to see, especially in an Apple, is that, okay, how many large trades are getting done? Apple's an expensive stock, $114 million. But what does happen is that if you have large buyers, meaning funds getting out, that's a big number. Well, thus far, we've only had one large sell since I've been on the air. if you're looking at this, when I say large sell, I'm talking about 20, 30,000 shares. At 1531, you had 23,300 come across the tape. And if we get another one, that'd be a heads up. But thus far, there isn't another one out there. So, you know, the yin and yang of that one is that, you know, you're going to need more selling to get this thing into lower price. It is a breakdown with volume, though. There's no doubt about it. We just did 2.9 million that last 10-minute spike. We do have inside the Qs. The Qs can't hold price also. The IWM, if you want to see something that's weak, man, this IWM is a trip. So the small caps, we're down $1.53. You're trading 113.52. Your last swing point out here is 112.66, and you get 42 million. The small caps look like they're going to, you know, go after these lower swing points, and they're vulnerable from those lower swing points. So that's setting up that, hey, you know, bottom line, the lower end of this whole consolidation is game. That is saying that the small caps actually leading on the way down. So this is going to be just wild watching the whole thing shake out. What you can also pay attention to with the IBM deal is this, folks, that August 24th swing low is important. Why? It's a high volume swing low. The indices are way off that low. However, what we have had, you've had some major stocks bust that low. Now, in IBM's case, you're busting that low with volume, and yes, it's coming out with an investigation from the SEC, which is problematic in itself. It's just absolutely amazing. Let's go over to the XLE. So oil and gas. What do we have? Bottom line, just save your powder, because oil and gas, what you have, the XLE is down 83 cents. You have the expansion of volume now, 15 million, and we'll see how this comes back and tests where it came off the bottom from, but I expect we're going to see that. The first level that we'll be looking at is $62.58 on the XLE. You go to ExxonMobil, we look at Exxon. You know, Exxon today has rejected lower price. It's kind of strong, really. Chevron, CVX. Chevron hasn't. Chevron gapped lower. Has about the same volume. Chevron's going to continue to go lower. Oxy, we take a look at Occidental, see how Oxy is trading out here. Yeah, Oxy dropped dramatically lower too. These oils, though, are going to be a field day, the way they're setting up to trade, folks. They love trading in these large consolidation patterns, and this one's a large pattern. You know, with Oxy, you're talking 63 to 73. They're all in about 10-point patterns. So, which would be really cool is that I've seen these oils, they can trade in these large consolidations for like 8 months, 9 months, a year. Then they'll move to a different floor after that. But that is a beautiful thing when you see something like that, because they're a lot easier to trade when they're like that. The XLF, we take a look at the financials out here. Financials, now the financials, they got a little expansion of volume. The financials are also saying that, hey, they're going to go after the lower part of this swing point. So that's going to be intriguing to watch how these financials trade. We're at 23.88. What's game here is the 22.70. If we take a look at JP Morgan, you know what's going to be interesting? So JP Morgan, folks, they've had this chase pay for quite a while. Yeah, JP Morgan has light volume, but what they're going to do with this chase pay is this. They're going to go give Apple and all these paying services a run for their money. Now, what I expect you're going to see is this. JP Morgan, man, is a monster, number one. They've been in the banking business forever. They have a built-in clientele. I mean, if you do business, you know, with Chase, the bottom line is that you get built-in clientele that's amazing. What's going to happen is that if you're a Chase client, you're not going to have to do anything in order to basically all of a sudden your card is, you know, going to be basically a payment card system in a huge way. Now, when I look at that payment system as it is, and then I turn around and you put that the woman that got derivatives going in a huge way in the middle of the 90s. Now, derivatives really got going, folks, and it started in 93, 94, well, big, and it got a lot bigger. That woman was she worked for JP Morgan. She doesn't work there anymore, however, what her head is wrapped into, and I suspect there's some backing from J.P. Morgan, is now the whole blockchain deal out of Bitcoin. And when I start looking at this yesterday, I'm saying to myself, you know what, they're putting this thing together, and J.P. Morgan's going to be the payment system, and they're going to use Chase to roll the deal out. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is down 56, Nasdaq's off 10, S&Ps are down 4, and what we have volume-wise is this. You're at 721 million on the NYSE, so that means that you'll have a slight expansion of volume from yesterday, nothing heavy. On the Nasdaq, we're going to do the same thing. So that is very subtle, meaning that flat market like what it is. So I'm going to go right back to the Qs. The Qs are saying that Apple's not going to be able to make higher price. The Qs are at 112.97. You've done 26 million shares. Your last swing point out here is 113.24 with 53 million. Apple itself, the way Apple is trading, it's amazing that one stock is 14% of the NDX. The ways Apple's trading, you actually get an expansion of volume as we're moving lower. You know, we did 66 million yesterday. You're at 52 million right now. And if we take a look at a few of the monsters, 1,500 hours. No, it's still only one big sell. The first sell that I had given you right there. That's, let me see. So that's 23,000. Okay, so you got, we got a few more. You get another one, 11,000 at 330, at 340. That must have just happened. Yeah, this just happened. another 10,000, another 10,000, another 10,000. Oh, you got them. The 10,000s are coming. Yeah, 10,000 at a pop. What's 10,000 at a pop? That's 10,000. That's a lot of money. That's a lot of money, honey. The IBB continues to keep that NASDAQ up, though. So the bulls and the bears are out here in an extraordinary way. The IBB is up 922, so they're goosing the IBB into the close. And this is going to be cool because at 4:05, okay, you stay tuned right here. Gilead's coming out with numbers. Now, Gilead is up 230. It's over at swing point, so it's like, hey, man, that thing can't get to the next swing. Doesn't have the volume. So what that's telling me is that we're going to have an extraordinary amount of volatility as soon as that comes out. You probably get the spike that'll give it up because what you do have, Gilead is coming into a monster downtrend. That downtrend out there is 22 million. You know, it had the juice on Thursday, but other than that, it didn't get to that swing point. So there's no doubt that we're going to get some real action out here. And, of course, the biotechs in general are so volatile, it's unbelievable. If we go over to Regeneron's up $20. You know, from the August low, it was 535. It's 435. It's at 565. The high out there is 605. And this is also coming into ice with light volume. Bottom line, folks, is that that IBB, it's hard to believe that you can get a counter trend bounce that big, but that IBB is setting up for a nice sell at ice, which is not that, I think it's, so the IBB, yeah, it still has to go a lot higher. So we need the IBB somewhere up about another 11 points. Another 11 points would be really sweet. We'll see whether we can get that much juice under the IBB. If we go over and we take a look at the bonds as we continue into this close out here, bonds continue to say, guess what? That Janet Yellen and the crowd are going to stay status quo. Status quo being no rate hike. No rate hike will mean what for the market? We'll find that out. Whether they can't go up in rates because things are slowing down across the world, and is there too much debt in the world? And if there's too much debt in the world, the way these, it seems to me like if you remember the commercial real estate companies, during the 2007-2008 debacle, there was many theories that thought the commercial real estate, would have big problems like residential. It didn't. The reason it didn't, folks, they had enough time to refinance everything. They refinanced it down to nothing, and of course, the sector did great. We'll see where Apple straightens out and Gilead right after the close. You stay right there. We'll be coming right back. Dow down 51. All about IBM. IBM's breaking a B point with volume. IBM is going down to 127, probably 110. Have a great one. Have a safe one. We'll be coming right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. We're going to have an action-packed 60 minutes, folks. There's lots of numbers coming out here, and we're going to get right on the babies. Expect to have hope rekindle. Expect your prayers to be answered in wondrous ways. Market-wise, let's take a look at it out here. We had the Dow Industrials down 41. All about IBM. IBM broke a B point with volume, folks. IBM is getting investigated by the SEC for accounting irregularities. Shocker, no doubt. S&P down 4, NASDAQ down 4. Gold contract flat at $1,166 an ounce. Silver down 3 cents at $15.87 an ounce. Platinum off 8 at $9.87 an ounce. Copper flat at $2.36 a pound. Light sweet crude off 75 cents at $43.23 a barrel. Bonds. Well, oil. Oil first, folks. Oil's going to the bottom of its range. We're talking 42, 41. It was down today. It broke the consolidation yesterday. Down today with volume also. Bond market. 10-year up 9 ticks, 128.28. 30-year up 12 ticks, 158.13. Bond market, folks, continues to say higher price, lower yields. You get the Fed meeting started today. 2 o'clock tomorrow, they're going to come out with an announcement. Janet Yellen, the Fed chair, has been out there saying that they plan on going up on rates before 2016. Well, guess what? You have this meeting, and if you don't do it this meeting, you get December meeting, and that's all she wrote. The bond market is continually to say they're not going up on rates because the money is pushing bonds dramatically higher with yields lower. King dollar up 55 ticks at 97.01. Now here's the divergence, and this is going to be wild watching this, how this shakes out coming into 2 o'clock tomorrow afternoon. The gold and silver market have rejected lower price this past week. 2 weeks ago, gold has a high volume swing high, so doesn't silver. They back down with lighter volume. That's saying that gold, silver wants to go higher. Now let's go to the King dollar. King dollar takes out its 2 swing points from September, last Thursday, Friday, with volume, wide price spread, with conviction. I took them apart. King dollar is saying, guess what? It wants to go to August 7th high. It's like, okay, man, who's going to be right? Because the logistics is that higher dollar, lower metal. You know, we haven't had that, okay, but we'll see if that changes. Euro's down 16 at 110, and the yen is down 68 at 120.42. What it's going to be all about here, folks, in the next hour, well, particularly in another 20 minutes, is Apple coming out with numbers. Apple, bottom line, the weighting structure inside the NDX 100, the Dow, and the NASDAQ is dramatic, that is going to move this market around. First out, Gilead closed at $110.98. This is trading right now at 109.30. Can't handle higher price. Nothing heavy, but just can't handle it. Now, this is where it gets interesting, is that Gilead beat, sorry, folks, excuse me. They beat the top line, they beat the bottom line. They have a gross margin. You want to hear the gross margin? This is like pretty sick. 88 to 90% gross margin. Bottom line is they beat everything, and guess what? They're still selling it off. So that says quite a bit about where we are in the marketplace right now. We go take a look at the S&Ps. What you have with the S&Ps are this. The SPY out here today did volume. Where's she? Okay. So the SPY did volume of 73 million, which is light volume on the back down. You know, so listen, the SPY can go test again this 207.95, which was the high of Thursday. Now the NDX 100, different ball game, and we're going to know this really quick because this is going to be all about Apple. What the NDX 100 did, and this was about the best clue that you could get as to what Apple was, well, we'll find out what it was going to do, is this. The high of Friday is 113.24. Apple closed at 113.08. It tested 113.24. We did that test with 29 million versus 53. It couldn't handle it. So that says that, guess what? Apple, that says that the Qs want to pull back. If we go over to Apple, and we take a look at Apple, Apple pulled back slightly out here today, 73 cents, big deal. What you did have, though, is compared to how Apple went up, you get some downward pressure. The expected move in Apple, folks, is $6 either up or down on the option market. We're at 114.55, the bottom of the range that Apple's been trading in since August 24th is the 107 down at the bottom, and you got 115 up at the top. No, you got 119, I believe. Yeah, 119 up at the top. So it looks like Apple more than likely will stay inside that range. Apple is coming out with its numbers at 4:30. So we'll have those numbers ASAP when those babies come out. Now, let's go over and we take a look at the gold market. What do we have with gold? And this is gonna be the action tomorrow. The volatility in this market, folks, is going to continue because you get Apple numbers today, you get the Fed meeting 2 o'clock tomorrow. So this is what we have with the gold contract. We're at 1166.50. You know, gold come off the bottom with really nice strength. On the 14th and 15th of October, you get high volume swing highs. 14th, we did 200,000 contracts. 15th, 192. We come down, we've rejected lower price, going right against the strength. So that way, the way the metal contract is set up, as well as the XAU, HUI, GLD, those are all set up to do an ABC structure on the way up. Now let's go to the dollar index, because this is major divergence, man. I mean, it's sick. And it's going to get straightened out on this call tomorrow. And I expect we're going to probably see moves both ways. So if we go over to the dollar index, guess what? The dollar index, Thursday and Friday, monster move topside, 52,000 contracts on Thursday, 46 on Friday, and then what did you do? You back down with lighter volume. What that sets up, folks, is another ABC up going to 98.74. So you have gold, silver, and the dollar having potential ABC structures on the way up. If they all go, and they all are ABC structures on the way up, what that's laying out, folks, you better get as many hard asses as you can as fast as you can, because what that's laying out is that the dollar will be the best currency. It's still the best currency of fiat currencies, but what that's laying out is that inflation is here and it's probably raging and we don't even know it yet. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Twitter just come out with their numbers. Twitter closed at $31.34. That's trading at $28.54. Bottom line is that they missed their estimates. Shares are down 9% right now. Now, folks, let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday at 20 past the second hour. Andy, of course, has an outstanding show right here at TFNN. It is broadcast every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right after my show. Now, you can get that program, folks, right on your cell phone. TFNN.mobi gets you the full audio. You want to get video, just go to TFNN.com on your cell. You'll see Watch Tiger TV. Hit that. You'll get the audio, plus you get the video. Now, coming for Andy's subscribers, okay, Andy's going to be doing a subscriber event. This is going to be on November 19th, which is a Thursday, right before, it's the Thursday before Thanksgiving, I believe. 6:30 to 7:30 Eastern Standard Time. And what he's going to be talking about, he's going to be talking about crude and the structure inside the crude market. Now, if you'd like to come to this workshop, you have to be a subscriber. But you can be a subscriber right now, 30 days, absolutely free by test driving it. The way you do it, you come over to our website at TFNN. You're going to see it right on the front page, the Technomento Commodity Report. What you're going to see actually on the front page is that you're going to see the crude oil prospects coming into the December 4th OPEC meeting. It's a big deal. Andy Hecht, what's going on?
Hey, brother, how are you?
I'm doing great, man.
That's good. That's good. Yeah, thanks for mentioning the webinar. What I picked that topic and that date because, you know, we're going to have a lot of volatility in crude oil around the December 4th crude oil, OPEC meeting, rather.
Yeah.
And that's always a very interesting biannual meeting. Last year, we came into the meeting at $75 a barrel, and you know what happened after?
75. That seems unreal right now when you look at oil. That's funny,
right,
man.
and people were saying it was cheap last year at 75 when we came in because it was down from 107.
I know, man. I was looking at gas on the way in this morning, and I'm looking at it like 243 and not thinking anything about it. I'm saying to myself, man, you know, we were almost at $5 a gallon, and you know, you get used to lower prices, man. It's
absolutely. Hey, I got a little story. Now in the next segment, you have Apple earnings coming out.
Yeah.
So I have a little Steve Jobs story. First of all, I went to see the Steve Jobs movie this weekend.
Yeah.
Which I don't give it a very good review. I had met Steve Jobs, and
really,
I'll tell you the story in a minute. But the movie itself, I thought it really didn't get it. So
okay.
I read the Walter Isaacson's book, which I thought was really good.
Yes.
The movie was, I was disappointed.
Right. Well, that's why it was interesting too. Is that. Did Sony sell it? Well, one of them sold it. Yeah, Sony sold it to Universal because they didn't like it either, and they're the ones that made it, I think. They did. They sold it, folks, 6 months ago at $30 million or something. You know?
Really.
Yeah.
I just thought it was really poor portrayal. So let me tell you my Steve Jobs story. Back in the 90s, when I worked at Fibro, and Steve Jobs had left Apple, he was fired by Scully.
Right.
You know, he developed this new Next system.
Oh, yeah. Huge.
And Andy Hall was friendly with Steve Jobs.
Okay.
And we bought the Next system for our trading floor.
Wow.
And he came to visit us. And basically, he described the system and all. And I had asked him a question in one of these sessions.
Yeah.
Really about the functionality, because he was spending a lot of time about what was inside the machine and, you know, all of this stuff. And I, you know, as a trader, I wanted to know, hey, is it going to put up the graphics for my charts? Is it going to give me my prices quickly?
Right.
Man, did I get a nasty answer.
Oh, yeah?
Oh, he yelled at me, basically. And he said, I'm not even addressing that. Next. It was classic.
That's wild, man.
It's pretty funny.
Andy Hall,
and
folks.
actually, Andy Hall told me, he said, he's a genius, but he's temperamental. Don't worry about it. You asked the right question.
Yeah. So Andy Hall, folks, you know, it was Andy's boss, Andy Heck's boss, but Andy Hall, folks, is one of the largest oil traders in the world, you know, so just in case we get new listeners.
Interesting. So we'll see what these Apple numbers are going to affect everything.
Oh,
you got Apple today and a Fed tomorrow.
Oh, I know, man. You talk about volatility, man, no doubt.
Oh, baby. It's good.
Hey, what do you think about that natural gas market, man?
Man, I'll tell you, I think that what we see here is, look, inventories have been rising steadily, 80 to 100 BCF a week. We're at like 3.8 and change trillion cubic feet in inventories. All-time highs are at 3.929, the November 2012
Oh, really? Interesting.
highs. And we have at least 6 weeks, I would say, of inventory injection. So we're going to probably get above those all-time highs. We might even get above 4 trillion. And that's been weighing on the market here. So we forced it down today on the November contract. We traded down to $1.95, $1.94.80.
I know.
So long-term support, $1.90.20, the April 2012 lows. You know what? Let's see the short interest build up in this market, and then we could get some fireworks later in the year.
You know, it's amazing, Andy. I'm not sure whether you were listening a little bit earlier. For all these poor folks in Boston, they might as well be in Europe. You're getting charged 3 times the amount for natural gas.
Yes, but you also have to realize, Tom, natural gas, when we look at the futures, it's the price of natural gas at Henry Hub in Erath, Louisiana, and the price differentials around the country are enormous. In California, it depends on pipeline, it depends on supply and demand in local areas. So natural gas, remember that fund Amaranth that blew up?
Yes.
They didn't blow up because of the price of natural gas in Henry Hub. They blew up because of the differential and the volatility of the differentials in different location
points. Yeah,
because
that was their trade,
basis.
right?
Right, which is the physical basis, and that is where the real risk exists. So, you know, natural gas futures are not necessarily a great representation of what they are in your locale.
Yeah, that's great to know. Now that's a different aspect. You know, I've been looking at the heating oil. Heating oil looks like it's going to basically, you know, blow out these lows, which is
that's you know what heating oil is all about, demand these days, Tom. I mean, you know, demand is weak. That's what we're seeing. Weak demand. The crack spread went down to 5-year lows 2 weeks ago. You know, we've rebounded a little bit because oil has caught up, but it's all about demand driven. And you know what? Talking about crude oil, did you see this morning that the administration is going to now sell 8% of the Strategic Petroleum Reserve?
Yes.
I just have one question. Where were they above 100?
No, I agree. You know, I guess.
Come on.
Well,
these are the worst traders in the world.
It is. Well, they're not selling it to 2017.
I understand.
You know? But no, I agree. Listen, man, I absolutely agree with you. I think it's bizarre. It's
bizarre. And India and China are going to continue to build up their reserves. You know, we're not talking about a hell of a lot of money considering how big our deficit is here. But I just don't get it.
This is what the deal is, and it's more than just that, folks. Okay, so inside this budget, this is where these politicians are all a joke. Inside the budget, they're going to sell some of the oil to pay for certain things. What they're also selling is the airwaves. Now, they expect to get a huge amount of money for the air. They're going to sell 30 different sets of airwaves also. Now, eventually all those airwaves are going to be sold, so it's like, okay, what else are we going to sell? You know, but that's also inside this budget too, Andy. You know,
I agree, but I look at something like this, and you know what? I will tell you something from watching oil over the years. Anytime the U.S. government, I don't care who the administration is, I don't care what party's in Congress, anytime they tamper with the SPR, it always marks a low or a high.
Ooh, that's so cool, man. Well, yes. I'm wondering if we got, you know, that'll be interesting. Okay, you stay right there. Folks, we're going to be coming back, and we're going to be coming back right when Apple's coming out with numbers. Andy Heck, Tom O'Brien, we want to hear from you. Our phone number is 877-927-6648. Stay right there. Come right back. If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Apple just come out. They beat their numbers. We'll see where this thing's going to trade. Thus far, it's flat. It's pretty wild. The expected move on Apple, folks, is 6 points. We'll see how that shakes out. Right now, closed at 114. It is trading at 111. This is going to be all over the place. Numbers go like this on Apple. The revenue estimate was $77.1 billion. They came in with $77.5 billion. The earnings estimate was $1.88. They came in with $1.96. So bottom line, now we got it up. It was down 4. Now it's up 3. We'll watch this as we're going through. We're talking with our man, Mr. Andy Heck, and we are talking commodities. So right now you got 114 to 117. Now you get the yin and the yang of it. It's been down 3. It's been up 3. It's at 117. We'll see what that baby can do. Hey, so talk to me about what you're going to do with this webinar, because Apple, is moving, but not something that's going to be monster up or down. It looks like by the end.
I think it's going to tell us a lot about the stock market, because Apple. Before we go into the webinar, Apple those numbers are good for Apple, no question. Now, if the stock market shows weakness tomorrow in the face of these numbers, you know that there's real problems.
Yeah, and Tommy and I were talking about this this morning on the show, that Apple's an extraordinary company. There's no two ways about that. They're going to sell a lot of product, but what happens with the market's always looking for, folks, is selling more and more and more. And,
Yes.
you know, when you take in, you know, I think I mean, what do you see what they take in? I mean, it's extraordinary. When you take in, yeah, 233 billion a year, that's pretty hard to even get that up 10%. Never mind, you know, it's a big number too.
Absolutely. When you get so big, it's hard to come to expectation. You know, that's one of the problems, by the way, with China. You know, the Chinese economy has basically doubled over the last decade or so.
Oh, sure.
And to attain 7% growth rate is very difficult. It's like a fund manager who manages $50 million and he returns a 50% profit. And then all of a sudden he finds himself with $5 billion and he struggles to make 5%. It's the same thing. It's tough to drive those bigger ocean liners in cash.
Oh,
you know?
there's no doubt, man. It blows my mind how, you know, certain fund managers can drive a $1 billion fund and make decent returns. It's like,
Exactly.
wow, how does that happen? I mean,
you got to pick very liquid markets, and you got to pick your spots very carefully.
And you got to have fast fingers, man.
Fast fingers, and you know what? You have to know how to play in these markets. You have to disguise your buying and selling. There's no question.
Huge.
No question. Anyway, so the webinar, Tom, what I'm going to do, first of all, I think oil is going to be volatile coming into this December 4th meeting. But what I'm going to do is I'm going to dissect and bisect everything to do with market structure in oil.
Okay.
Processing spreads, term structure, location and quality spreads, and really come to some kind of conclusions. And what I'm going to do is I'm going to give a recommendation at the end of the workshop.
Okay.
In terms of, you know, a short-term play.
Yeah.
Designed for the volatility of the OPEC meeting period.
Nice.
So yeah, so it should be good. I hope we get a lot of new people who come on board for it. And you know, we got a couple of weeks to go, and I'll be preparing. I wanted to do it as close as possible to the meeting. Give us house 2 or 3 weeks so we can play the volatility as all eyes in the oil market certainly turn towards Vienna.
I know, man. And listen, folks, in order to come in the workshop, just come over to our website at TFNN. You're going to see it right on the carousel. Crude oil prospects coming into the December 4th OPEC meeting. Now, what's really cool, folks, is this. Andy's newsletter comes out Thursday. So if you come over right now, you take the test drive, you get 30 days absolutely free. That's going to get you into the webinar. It's also going to get you this Thursday's Technomental Commodity Report. So check it out. So, you know, let's go. Can we talk grains for a second?
You know, you read my mind, because the next thing I wanted to talk about was wheat.
Yeah.
I wanted to talk about wheat because you know what? Corn and soybeans, I got to tell you, right now,
okay,
I think it's kind of dead money. You know, the harvest, we're in the harvest.
Yeah.
We had good crops, third year in a row. Big corn crop, it's around 380. The range is 360 to $4, so we're smack in the middle.
Okay.
Soybeans, same thing, around $8.90 a bushel. But we're getting some volatility in wheat, and that makes a lot of sense for a couple of reasons. First one is that, you know, the U.S. is the largest producer and exporter of corn and beans.
Okay.
So our crop rules.
Yep.
When it comes to wheat, we're a large exporter, but we are certainly not the number one. It depends on, you know, crops around the world. It's produced in Russia, in Ukraine, in South America, in Australia, in Canada. There's a lot of wheat coming from a lot of different places. And with this El Nino, wheat can go into volatility overdrive. And we've been seeing some very nice trading patterns back and forth around the $5 level, between, let's say, 480 and 520, 530 lately. And I think that wheat has got a real chance to do something interesting this year. One of the really interesting things going on in wheat, Tom, is that there are 3 types of wheat. There's the Minneapolis wheat, the Kansas City wheat, and the Chicago wheat.
Okay.
The Chicago wheat is soft red winter wheat.
Right.
The Kansas City wheat is hard red winter wheat. And the hard red winter wheat generally throughout history trades at a 20 to 30 cent premium to the Chicago wheat, because bread manufacturers in the U.S. use that Kansas City wheat as a pricing mechanism.
I see.
And they tend to hedge. Right now, it's trading at a 22-cent discount in December.
Really?
That is a divergence in the wheat market because there was a very large crop and good inventories of Kansas City wheat. But this is a divergence. If you go out to 2016, the Kansas City trades at a premium. So that's telling us now that the consumers are living hand to mouth and they are not hedging. that much.
Yeah.
And that is a prescription for a lot of action in the future, because I've consulted for a number of wheat consumers over the years, and they tend to come in to hedge when prices are screaming higher. And when prices are going lower, they tend to go hand to mouth, which is, by the way, counterintuitive.
Yeah, no doubt. And, folks, we're talking futures here, but, if you go over and you want to trade this in the ETF market, Tucrium has a ETF. It's WEAT.
Absolutely. And it's liquid.
And it's liquid. And, we're at 991, maybe 948's the number here, on a pullback,
Absolutely. I mean, Tucrium has all of those. They have a corn, symbol CORN.
Yeah.
They have a soybeans, SOYB. They have a wheat. They even have a sugar, which has been in play, the cane. And they have a tags, which is the kind of composite of all of them. But these are great ETF products to look at the grains, and a lot of the other products out there are ETNs. So this is and they've also designed them so that they minimize the effects of the rolls, which sometimes eat these ETF and ETN products alive. And hey, they're interesting products. They should certainly be part of everyone's portfolio from time to time.
Yeah, when I had Sal on, he was actually explaining what you had just explained, the 3 different kinds of wheats, because that is combined inside that WEAT, which was really interesting in itself.
Exactly, which smooths it out, which doesn't make it. It's a very interesting product. I think it's a great product. I trade it myself.
5 o'clock, 20 minutes, man.
I'll be there.
Hey, time flies, doesn't it, man?
It does.
Especially when you're having fun.
Have a great day.
Thanks, brother. Have a great one. Have a safe one. You stay right there, folks. We'll be back with more numbers. Andy's going to be coming up with you 5 to 6 o'clock tonight. Right on your cell phone, TFNN.MLBI. Going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Okay, so let's go over to Apple. It's actually a non-event, which is pretty wild, folks. Apple closed at 114.55. It's trading at 117.93. The high of Friday was 119. So bottom line is it's not even getting to that high. So let's see what they have to say. Mr. Dave White just told me they have $206 billion in cash. Now that is no doubt, that is one monster number hanging in cash. What you do have where Apple might have some problem is that they gave a quarterly sales forecast for this shopping season that was under some of the analyst estimates, okay, showing that they can't seem to be squeezing enough out of the iPhone just yet. They're thinking that first quarter sales are going to be from 75 to 77 billion. You know, what does happen with Apple, though, on a continual basis, folks, they always are sandbagging. And what sandbagging is that you give out low numbers so that the expectation is low. When they come in higher, you can get juice inside the marketplace. So we'll see how that does shake out, but that's how they are trading at this particular point. No big deal. That's what it really comes down to that. Now, 2 points will put some juice inside the NDX 100, and more than likely what you will see, well, here, we can find out right now if the Qs are trading up and over that high. Right now, Q. 113.57. So they are. It's 113.24. So the Qs are over that high right now. That stays at that price. That would be saying that the Qs will go up and tag the high of the NDX 100, which is the 114.39. Right now we're trading at the 3 Qs. You're trading at 113.50. You know, my take would go like this. Okay, is that if Apple can only do, and this would be overnight also, you can only do 3 points. 3 points is not enough, folks. The reason being is that the amount of folks that are in Apple are extraordinary. They have to sell to someone. And when everyone's in an equity and you don't have anyone to sell to, guess what the professional does? They get out, and they get out quick, because they know that, who am I going to sell to? Well, once everyone figures out there's no more buyers, which the market is showing right now, there's no more buyers in Apple, it's a big number. And it's showing two things, actually. It's showing that it's showing that they had great numbers, and no one's buying it. Because why? Because it didn't spike 10 or 20 bucks. If it spiked 10 or $20, the people that were in it, number one, would have a great way of getting out. The folks that aren't in it, people like to buy big breaks like that, they would have put some juice in the marketplace. When you have an equity that can't even get to the highs of 2 days ago, that's a huge problem. It just, TWTR Twitter came out with numbers. Twitter closed at 31.34. That's trading at 27.90. That is going to go after its last high volume swing low at 21. Twitter's got a major problem. No two ways about that. Gilead, which is going to run the IBB. Gilead's trading down about $1. Nothing heavy there. 110.96. That's down at 109.30. And then, of course, what we are going to have out here tomorrow is that the volatility will continue in the marketplace. The volatility tomorrow, folks, is going to be all about the Fed meeting. And, I can see that meeting there will, more than likely, put and keep volatility into the metal market, into the commodity market, and into the U.S. dollar. Andy was when Andy was talking about oil. That's going to be a great workshop, number one. But this oil market, man, we are going to have. It looks to me like we're going to have some very inexpensive oil once again. If oil can't hold, we're at 43.28. Now, when we came off the bottom, folks, you came off the bottom at 40.57. I suspect that's going to get tested. Where I think we're going to get a better heads up is that will that test hold, and we'll probably get this tomorrow, is inside the diesel market, the heating oil market. The reason I'm saying that is that today, this has got into the lows that were established August 24th. We traded to 142.97. We're at 144.63. Now, it came down there, folks, with big volume. So it looks like it wants to break out that low. You break out that low, you get yourself a nice ABC structure on the way down. And it's a decent ABC. If we put heating oil, let me see if I can put this on a continuous contract. We put this on a continuous contract. We're at 142 wholesale. Oh, interesting. Okay. 140. Man, this is a trip. Yeah, this is 137 is wide open, and this has been destroyed. So 137 is wide open, and actually the lows of 113 are wide open. That would be absolutely wild. So the 113 lows in heating oil, folks, that was established in the March 09 area. It stayed there for 4 weeks. We'll put this on a monthly again for a second. We'll see how this shakes out. This is amazing that 1 second you don't have enough energy, or they say you don't. The next second we have so much energy that it's going to be hitting lows. So check this out. Right now, we are at levels that we were in 2004. So 11 years later, we're at the same level. That's the saying it wants to go after those lows. That 112 level is game to get tested. That's the way this is shaking out. You know? Inside the, what we did have inside the NDX 100 today, it was the IBB, folks, that was putting juice into that level. Now, let's go to IBM. IBM, folks, IBM is an ABC structure on the way down. At 1:30 this afternoon, the IBM disclosed that the SEC is investigating their accounting practices. What that did, bottom line, you talk about fast, furious, all of the above, it goes south, and it goes south in a big way. Now, IBM had been in a complex ABC structure on the way down. What a complex ABC is that you break a low at volume, which we did October 20th. It blew out the low at volume. We came down to 140.27. You did 16 million shares. That was taken out your swing point of the 24th with 10 million. So that's the ABC structure on the way down. That had a price projection of 127. What did IBM do? IBM bounced from 140 up to 145, dramatically lighter volume, 5.3 million versus downtown 16. What happens today? Blows out of the water, breaks a B point, breaks it with volume, and this, folks, broke it with volume on the daily, on the weekly, and on the monthly. So IBM, number one, first price projection is $127. I suspect this is actually going to go to 116. 116 is the high of the October 8th lows. You stay right there, folks. We're going to be coming right back. And, of course, right after my program tonight, our man, Mr. Andy Heck's going to be coming up with you, growling and prowling with you. Dow down 41, NASDAQ off 4.5, S&P's flat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And folks, if you would like to test drive either my daily newsletter or the Gold Report, which is my weekly, you can do that by coming over to our website at TFNN. If you'd like to test drive the daily, go to newsletters, go to trading newsletters. You see Market Insights. You can test drive that 2 weeks, absolutely free. The Gold Report, you go to newsletters, you go to investment newsletters. You can test drive that for 30 days, right on the front page of TFNN. Apple's not doing a thing. Apple's trading at 116.40, and that had closed out at the 114.55. Some of the suppliers are up 0.2 points. These suppliers have already got killed, though. Whether it's AVGO right now, AFCO Technologies, that closed at 121. That's trading at 125. Nice pop up there. That's down from 150, though. So it's going to be wild watching this whole thing shake out. Yeah, down from 150. The last high was 129. What is wild is that you get the supplier having a bigger pop than Apple itself. You know, so this is going to get wild watching this thing shake out. 116.83. So what you do have looking at Apple, their profit was up 31% for the fourth quarter. They beat all the forecast. They made $11.1 billion on the iPhone. I mean, that's a monster, folks. There's no doubt about that. They sold 48 million, I believe. Yeah, 48 million iPhones in 90 days. That is a monster number. And it's all a monster. But guess what? When everyone is in the stock, there's no one else to sell it to. And what has happened with Apple, has had an extraordinary run. If you bring back Apple to 2009, we're only at 2015. Stock went from 9. So watch this. This is pre-split, but bottom line is that, you went from 2009, $11.70, up to $134. Now watch this though. The last time that Apple has any volume, and my take is that where this thing is going to. Well, first off, it already came down to this point, but because it doesn't have any juice on the upside, it will come down again, is $88. $88, folks, was the high of March of 2012. And what it did, it tagged 85, I believe. It tagged 92 in March on the way down. It's going to hit that level again, But you can see when you look at this on a much larger basis, and you know, the roll is happening, okay? When I say the roll, the longer that you stay at highs with light volume, that is all about distribution, and when the markdown starts, it gets vicious. We've been at highs since November of 2014, so almost a year, at the same price, and the volume's dramatically lighter. When you take a look at it, it's absolutely amazing. The first indication that markdown started was in August. You know, we had hit highs every month at 900 million, 1.1 million, 870 million, that's at the highs. Then you came off the highs with 1.6 billion. So when you look at that on a percentage basis, we came off that high with almost 50% more than at the high. Problem extraordinaire. So, well, this is going to be, Apple to me is saying you're going to have a problem with the indices as we go forward. Just as we had talked about Walmart. Walmart was on the table that, man, oh man, Walmart's going to break the consolidation, a 12-year consolidation. Sure enough, broke it in spades too. You know, Walmart, you know, goes from a price point of 90 to 57, and IBM. IBM's the next culprit. Bottom line, IBM's at 137. That's going to 110. You stay right there, folks. I'm Mr. Andy Heck's going to be coming up next. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right there. Andy's going to be up there growling and prowling with you. Give him a call. Go get him, folks.